Okay, this is Brian for Timing Strategies, Wednesday, October the 17th. Quick review. Market kind of did well, just as our script kind of indicated. If you look at yesterday's daily commentary for the 16th, we were looking for a gap open higher, a sell-off to take out the lows of yesterday's lows, which we got, and then a trade back up into the positive above yesterday's lows. It almost did exactly what we indicated. Again, look at our commentary for the 16th. The only thing that we missed was I was looking for a little weaker gap on the upside for the opening and a little weaker sell-off for the most part, and a stronger close actually into the end of the day than we got. So again, I was looking for a stronger close, but we didn't get it, but we got a stronger opening. That kind of left mixed signals. We still, on our end of day for the Ridex system, it's an end of day platform, still 30% short, although for our ETF intraday models, we did get long at that 153.40 level, so we are long a basket of the Qs, IWM, diamonds, and so forth using the 2 beta ETF, so it helps conserve capital. So we're long in one portfolio with our intraday approach, still short 30% with our Ridex end of day. And if we get a little more of an upside bump or another indicator based on how we're using our system, we will close that, or at least go flat on the Ridex system end of day, at least go flat and look for a possible long setup. But again, as we are now, we're still short. I want to go over real quick some of the other indicators that we're looking at as far as the oils. Oils today just could not get it, and that's a sign of weakness as far as the rally that we got on the way up into the close today. If oils couldn't move up any higher than they did, that, again, oils in the commodity-based index, stuff like the materials, that doesn't bode well. If we look at the GDX, being the gold miners, really got, again, another kick in the teeth. So what I'm seeing here right now, if we look at the Qs based on the overall indices, is I'm seeing a lot of churn. I mean, for 1, 2, 3, 4, 5, 6, 7, 8, almost 9 days, we've gone practically nowhere, and that's how a market generally works, and that's what we kind of got last year. A lot of churn in one area, and then bang, one day that just takes off like a like a rocket all in one day. Is that setting up right now? Very possibly, and we'll have to wait to see for that. But again, we still have a 30% short position on our end of day system, but we're looking to get long again. But that churn is not, that's been churning too much here. We shouldn't have gotten that many days of where we are right now with that kind of volume with very little price advance. You look at some of the other sectors like the XLF, and again, a very strong potential buy setup that we've got today. We will look to get potentially long that, although I think these are the dog meat of dog meats as far as the overall market is concerned. The XLF, the financials, or if you look at the real estate sector, the IYR. Again, still dog meat, but again, dog meat can still catch a bid once in a while. So we have the short position that we put on this morning. We still have a short position in the negative ETFs using the SRS. But we will cover those if we get a violation of today's low on that. Also, if you look at the SKF, we still have that position from as of the open today. And also the SMN, which is a materials negatively correlated ETF. We have a position on in that as well today. Moreover than that, really, oil, bonds, and the SOX I want to bring to attention is the only thing that's really catching a bid right here are the SOX and the semis because of Intel yesterday, and then also we're not using the SMH because it's got some problems with Maxim. If you take a look at the HHH, for the most part, that's really catching the most of the market here. Is the chip equipment companies, Intel and so forth, the SOX, and the internets. The decline is getting more advanced in the materials. If you look at, again, the GDX and you look at the oils, really didn't rally too much today. XLE, based on what we got out of the rest of the market going to the close. What we're also seeing here is a lot of churn in the emerging market ETFs like the EEM. A lot of volume coming in. Market's really not going anywhere from there 8-9 days in the same range. You look at the EWZ for Brazil. Again, a lot of churn. So is that, that's the first sign of a market top. One of the indicators to look at for a market top. But again, could we get the Fed and the Treasury jamming more money into the markets based on the Dow and the S&P? Absolutely. They've got confidence that they've got an influence and perception with the public going into Christmas and the shopping holidays. So we could get that one-day Big Bang theory where one day's bar looks something like what we had on the 18th with the Fed with their meeting. We've got a meeting coming up on the 31st, which is in less than another couple of weeks. So right now on a day-to-day basis, are we going to get the pattern that we're looking for as a take out of the highs and then again another wash out of the lows? At this point, anybody's guess. I'm going to back off of that script or that modeling and just play it day by day. So as you know, you see our positions, and if you have any questions, please give us an email at our website, timingstrategies.com. I encourage your inquiries and so forth, and I wish you all a good night.